Welcome to the Apartment Investor Pro podcast, where we talk about how to be a more successful multifamily investor with a focus on using technology to boost your business. And now your host, Todd Heitner.
Welcome to episode 8 of the Apartment Investor Pro podcast. Our topic today is keeping investors happy so they will invest again and again. My guest today is Dan Hanford, who's very well qualified to speak on this topic. Dan is one of the managing partners with PassiveInvesting.com. That's a national private equity real estate investing firm that has acquired over 2,600 units with a portfolio valued at over $259 million in just over 24 months. Dan is also the founder of the Multifamily Investor Nation, where he provides free multifamily education to a nationwide group of tens of thousands of members. Today, Dan will share tons of practical tips, including how and when to communicate with investors, how to keep investors happy when something goes wrong, the step-by-step process for securing capital, and some very practical ways to keep your investors happy so they'll keep coming back. So let's get right into the interview. So I have Dan Hanford with me today. Dan, how are you today?
I'm doing great, Todd.
Yeah. So today we're going to be talking about kind of managing investors. The goal, everybody wants to get the deal, they want to get the investors, and once that's all put together, then how do you keep everybody happy? How do you make sure the investors are, will want to invest with you again in the future? So maybe it just as like a quick overview, like once you get a deal, what do you do to keep your investors happy?
Yeah, well, there's quite a few things that go on there. And one of the things that, I'll kind of mention to your audience first is our kind of philosophy about how we, try to attract our investors. And one of the things that we do is we kind of look at this, I call it my investor triad, really. And it's not really something that I came up with. It's something that I've seen in other spaces. And some of you on here probably have heard of it before, but it's an investor triad. That's kind of it's a triangle. So if you're listening and you wanted to pull out a piece of paper, you could do that. Just write a triangle on your piece of paper or in your head, just think of a triangle. And at the top of it, you could write the word know, K-N-O-W. The bottom left, write the word like, and on the bottom right, write the word trust, know, like, and trust. And when you think about that, you think about, okay, in order for someone to be able to invest with me, I have to get them to be able to know, like, and trust me, right? Well, of those three things, which one is the most important? And that's really what you have to think about when you're trying to attract investors, but also comes full circle when you're trying to maintain your investors at the same time. And I'm going to get to that maintaining section or side of it in just a minute. But let me ask you, Todd, of those three things, what off the top of your head comes to mind? Know, like, or trust?
Well, I would say knowing has to come first, because they can't like or trust you if they don't know you.
Mm-hmm. And I don't know if you've probably heard me say it before or not, but a lot of people think it's trust, right? They think, oh, the trust is the most important, or some people will say like, but really it's just what you said, Todd. It's know, right? Somebody has to be able to know you and get to know you before they ever have an opportunity to be able to make an opinion as to whether they like or trust you. And so you have to make sure you're filling your funnel, if you will, with new investors that are saying, hey, I now know you. I want to get to know you more. And so that's important from the top of the funnel, if you will. And as you start to go down the funnel and somebody actually invests with you, that means they've gone through that whole stage of liking you to the point of trusting you enough to actually send you and wire you money and say, I trust you to be able to manage my investment, and I'm going to put it in one of your projects, right? Well, sometimes we think about it, we just stop right there. But you have to be able to maintain that relationship, because guess what happens? When you actually maintain the relationship through the entire process, that if you were to write arrows from know to like, and then from like to trust, it doesn't stop there. Matter of fact, it continues on in a cycle. You actually can now write an arrow from trust all the way back up to know. And you think, well, how can that person get to know you again? And that's not what we're trying to do. We're trying to get them to like you enough and trust you enough and enjoy investing with you enough that they start to refer their family and friends and colleagues, because now they're going to get to know you, and that whole cycle will start all over again. And it just creates an exponential effect when you're trying to grow your investor base. And so setting some of these things that we're going to talk about on the podcast today about how to maintain your investors is going to be crucially important as you continue to grow your investor base. And this is where I see a lot of operators, a lot of syndicators and sponsors falling short, is they stop once they get the investor in a deal. And that's actually for us in our group where it starts, where it really starts or really begins, because we want to make sure that we can outperform for our investors. We want to make sure that we can over communicate. We want to make sure that they feel like more of a person, and we have more of a relationship with them than just a specific number. And so one of the things that we do with our projects, once an investor gets into the project, is we're going to over communicate. We every single month, by the 14th of every month, we send out an email update that gives them an update on how the prior month's performance was. So we have investors that have invested in every single one of our projects up to this point, and they're getting multiple emails because every asset that they're in, they're gonna get a separate email telling them about the occupancy, the pre-leased occupancy, the marketing, any type of marketing updates for the property, anything we're doing from a renovation standpoint or CapEx. We're gonna provide pictures, community events, and then we're gonna also include some local market news as we come across that type of news to help to confirm to the investors of what's going on in that particular market. And that's done by the 14th of every month. Matter of fact, today is actually the 13th of the month. I was just on a phone call before this with our director of marketing and PR, and she's working on finalizing those today so we can make sure that they send out properly tomorrow. And this actually, we're recording in October. So at the end of every quarter, that next month, we actually release our financials for the investors, and we put them on our portal so that the investors can go on there and download the financials so they can see and have transparency on how the actual property is performing itself. And one of the other things that we do is at the end of every year, a lot of times the K1s are what hold up investors from filing their taxes. I myself am in over 30 passive investments right now. And there's been several of them that I've had to wait and file an extension on my taxes personally because I'm waiting on them to submit their K1s. Well, for our group, we try to get them done as soon as possible. So normally we have to have them done by like the 30th or the 15th or something like that. So we'll actually have them by March 15th, but we will usually try to have them done by the beginning of March, right? Where again, personal taxes isn't filed until April 15th, as everybody knows. But again, we've had to wait for some to come through because they didn't even get it done by April 15th. And so we try to get all of our books finalized and closed out by the end of December, and then finishing it up in the beginning of January so we can submit those over to the CPA to have those finalized. Like this year, I think we sent it out on March 3rd was when we sent them out to our investors. And so that's another kind of key point to be able to remember, that you got to put yourself in your investor's shoes. If you do anything to kind of tick off, if you will, your investors, they might not want to invest with you again. Yeah. And one of the other things that we do is the types of properties that we try to acquire are properties that cash flow day one. We're not buying lower end B and C class properties that are going to take a while to do renovations and they have really low occupancy. And we're trying to go in and outperform the property from a occupancy standpoint and renovating. That's not what we're trying to do. Now, we still do some renovations on some of our properties, but we're buying properties that are above 90% occupancy. Matter of fact, the lowest occupancy we have acquired is 93%. And that's because we need that cash flow day one so we can make sure we're giving to investors distributions the day we close, right? Maybe not the day we close, right? But we typically wait till we have a full month of operations under our belt. So we're actually closing a property later this week. And so this is the middle of October. We'll wait till we have the full month of November under our belt. And we're actually gonna do our first distribution in December. And it'll cover for the prorated portion that we owned it in October, the full month of November. And then starting in January, it'll be ongoing past after that point on the regular monthly distributions based on our projections of cash flows for that first year. And of course, at the end of every year on the 12th month, we'll always look back at the cash flows and see, are there additional cash flows over above the projections that we can distribute to the investors? And if we can, we will. But a lot of that, all those things that I've been talking about as far as maintaining is crucially important. And then there's some other things that we do too, and we can dive into that. But I'll stop real quick here, Todd, and see if do you have any questions about what I've covered so far?
Yeah, no, look, that's good. So you send out monthly emails and then quarterly updates, and then the end of year stuff. Do you ever send anything in between, like if something comes up, or is it mainly?
Most of the stuff that comes up is going to be sent out in the monthly updates. Yeah. But I will say that, this past year with COVID, things were just going all kinds of crazy, right? And one of the things that we opted to do is, instead of just updating our investors on a monthly basis, we decided to start sending a weekly email I think it was about like the middle of April when we started to be able to, a little bit, there was a lot of question marks as to how the collections were going to be for the properties. And so we started to put together a weekly email. And so every week we sent out an update on the collection status for the property. So the investors were aware of it because we knew we were going to get questions about it. So instead of just waiting for questions to come in about, hey, where are the collections, and then worrying about if we're going to make distributions, we told them, we said, we're going to update you right now on a weekly basis on every single one of our assets. And it was a lot of work for us to do that every single week, but we felt like it was the best thing for our investors so that they knew what was going on during that time.
Yeah, that makes sense. A more proactive approach, and rather than them worrying about it and contacting you, you're upfront about them with them. So, okay, great. And so, what do you use then for communicating with your investors? Like, what kind of tools have you found to be useful for that?
Sure. So we have two different softwares that we use for managing our investors. One is for once an investor invests in one of our deals, we use a software called RealPage AIM. Actually used to be called IMS, and Investor Management Services or Solutions or whatever. And we use that as our investor portal. So, but only if an investor invests with us do they have access to that. And that's how we manage their financials and their distribution information. And we load all the stuff in the portal, and all their PPMs are housed there and their K1. And so it's an online portal that our investors can access to be able to have the ability to be able to download documents and have a repository, if you will, of all those different items in it. And then it also allows us to be able to calculate our distributions and our waterfalls, and it does all of our ACH distributions and things like that. And then from the marketing perspective, we actually use ActiveCampaign, and ActiveCampaign does all of our communication. And whenever I have a phone call with an investor, I pull up ActiveCampaign. I'm taking notes inside of the ActiveCampaign so we can have that as additional documentation, not just necessarily just for the SEC rules and regulations, because right now we're doing primarily 506 Charlie's, where we don't have to have a lot of documentation when it comes to conversations with investors, but we do it because if I get on a phone call with an investor and one of our other partners to talk to them, I can look up the notes and see what that last conversation was about, what actually transpired. And same thing for myself. When I call an investor, I like to pull that up on my phone because there's a mobile version of it, and I can see some of my last conversations with them. And I'll put things in there like the investor tells me about how many kids they have, where they went to school, who their teams are, and so I'll have all that information in there. It creates an additional rapport building with those investors, and again, continues to deepen that relationship with them.
Yeah. Okay. Awesome. So you use ActiveCampaign before they invest with you, and then do you use that also some after they invest, like for some communications, or?
Yeah, so we do still use ActiveCampaign after they invest to be able to communicate those monthly email updates, because they're all loaded in there as templates. So we can go in there and modify the templates for that particular month. And so all of that is still done in there. IMS does have the ability to do that inside of their program, but we didn't want to have two different types of programs sending out emails to the investors for that kind of stuff. So we keep it all housed inside of the ActiveCampaign.
Right. Okay. That makes sense. And just a quick question too. I know you said you've invested in different deals. I'm sure you've invested in some that probably don't communicate as well as you try to. Can you maybe tell a little bit about that, like the difference it makes for you as an investor, how the communication goes?
Sure. Well, I think the biggest thing that I've seen from some of the other projects that I've invested in is the fact that, because there's like 9 different operators in the passive deals that I'm in right now. And one of the things that I see is that they try to make things a little bit too impersonal. To give you an example, instead of just saying, when they're closing out an email, instead of saying, thanks, Dan, and the passiveinvesting.com team, or, so closing it out with somebody else that they actually know writing the email, they'll close it out and they'll just say, the passiveinvesting.com investor relations team. And they're like, well, who is it? Who was I communicating with? Right. Mm-hmm. And I've actually had email responses from people that are in some of these projects that they will respond to an email, and that's what it says. So you don't even know who you're actually communicating with. It just says you're communicating with the team. Right. And I know why they're doing that, because they might have multiple people that are responding to things and taking care of tasks and things like that. And when you don't have a very large team, it's a little bit easier to do it that way. And we don't have a very large team ourselves, but we have a dedicated person to investor relations. I actually have 2 of them, myself and then my assistant, Ann. And between the 2 of us, we're the ones that are communicating with our investors. And I want our investors to know who we are. I want them to have that relationship with us, because the more I can have a relationship with them, the more they're going to feel comfortable uncomfortable to invest with us. The moment you actually try to hide behind a label or a department or whatever, it starts to create a bit of uncomfortability with that investor, and they likely won't want to invest with you again because they feel uncomfortable.
Yeah, that makes sense. Because like you're saying, you're trying to build a relationship, and when there's no person there behind it, you can't really build a relationship with a company as much as a person. So yeah,
correct.
We all try to automate as much as we can in the business, but where do you find the balance between like finding things that you automate versus things that need a personal touch, like with investors?
Sure. Well, I think with investors, as much as you can do personal, it's better. It's kind of like, we talk about relationships, right? Well, if you're married and you have a wife, or maybe you're not married yet and you have a girlfriend, have you tried to automate things there? Right. I mean, think about it. Like how would your wife feel if you just, set up an automatic once a week, they're going to, get someone come over to the house and drop off some flowers, it's all automated. It's not personal anymore. It's like, oh, I just do that automatically now. I've thought about it, right? Like that'd be kind of cool. Every week my wife gets a thing of flowers, but then it loses its relationship aspect, right? It's more just like, oh, it's on auto pay, right?
Right, yeah.
It's not anything that I'm thinking about. And one of the things that we do that I would say is different for the investors, because a lot of things we do are very personal, and there are some things that we do automated. So we send out a monthly newsletter to our investors. There's actually one right over here. This is a monthly newsletter that we send out to our investors every month. We call it the Passive Investor. This is the one we just sent out in October. This is a really nice kind of high quality, glossy piece of like a magazine style, if you will, that we send out. This is every month we're sending this out. Each one of these that we send out, that would be considered automated, even though we're writing it, but it's automatically being sent out to them every month. It's not like we're hand addressing the envelope or anything. Right. We have a mailing house that actually prints those out. This is something that allows them to be able to hear from us every single month. So each one of our managing partners, there's 3 of us, each one of us will write an article in there and talk about something that we are working on or thinking about, or so they can kind of know how we think, right? It's another way for them to be able to build a relationship with us, even though we can't get on a phone call with every single one of our investors every single month. But it also allows us to be able to have some additional communication with our investors, because we mail this out to them, not email. This is mailed out to them. So there's definitely an expense there. But then we also are able to put additional things in there like this. So this is actually a little short-term private lending fund that we started back in June of this year. And we just started promoting that to our investors so they are aware of it, called the PIC Fund. And it allows us to have another opportunity to be able to reach out to them. We also, inside of this newsletter, include some fun things like a little word search on the back and things like that. And then now that we have their mailing address, the actual printed out high quality, brochure or investment offering memorandum or investor offering memorandum for our investors. So this is one that we're going to be closing on at the beginning of November, called Braxton Carey Weston. And you can see here, it's a really nice, see how many pages this one is. This one's about 72 pages. We print these up and we actually mail these to each one of our investors whenever we have a deal, because we want them to know that we've actually released a deal. The reason why we started doing that is because we have about a 53 to 54% open rate with our emails, which I know you, Todd, do a lot with email marketing. And so obviously that's a really good open rate. Like most people are lucky if they get 20%, right? But obviously we're highly curating our email list. We don't have, a bunch of people on there that don't want to be on there. But I also, when we release a deal, I looked at that and I was like, but that's like 45 to 50% of people that are not even opening up the email when we release it. But whenever you mail something out like this, you're going to get 100% open rate, right? Because we actually send these out in priority mail envelopes. So it looks important. They want to open it up right away and they can actually see exactly what it is. And it allows us to be able to continue to have that level of communication with them. So that's kind of some of the automated stuff that we do, even though it still is a manual process for us to put it together and things like that. But then one of the other things that we do is every phone call that I get on with the investors, I take my cell phone out and actually program their name and their phone number into my phone. And when I have a phone call with them, I'll send them a text message with my contact card, which has all my information in it. And I tell them, hey, thanks for having a phone call with me. It was a pleasure speaking with you. Here's my contact card, so you can easily add all my information to your phone. But one thing that I do that's different is in the company field, I'll actually put the word investor, so I know they're an investor, and then I'll put the actual city and state of where they're located. And if it's a city, like for example, if it's like I'll just give you an example. In like Tampa, Florida, there's a submarket there called Riverview, Florida, right? Well, I'm not just going to put Riverview because I don't really know where that is, right? But I'll look up Riverview and I'll go, oh, the closest largest city is Tampa, and I'll put in Tampa. And the reason why this is important is because now when I travel to Tampa or Dallas or Orlando or LA or wherever, I can now search in my phone for that city, and all the investors that are located in that city are going to be popping up on my phone, and I can send them a personal text message and say, hey, I'm going to be flying into your area. Wanted to see if you want to grab a cup of coffee or dinner. Or a lot of times we'll actually put together an investor dinner. I'll just invite multiple investors to an investor dinner that'll have 6 to 7 to 8 people in it, and allow us to be able to connect other investors in that market, but also for us to be able to have a touch point with multiple investors all in one meeting.
Sounds really good. So yeah, because I think those, which maybe we'll talk about a little bit more later, but also the face-to-face things is hard to replace that. Like the phone calls are great, the emails, everything else, but like face-to-face is great whenever you can make that happen. So
yeah, the face-to-face stuff is crucially important. It's where, and I'm not perfect with it. I mean, I'd probably say 90% of our investors I never meet face-to-face. I feel like our group sees more of our investors face-to-face because we make an effort to actually go to these different markets when we're traveling, actually set up these different dinners, and it allows us to have a lot more face-to-face contact with them. And the more you can have face-to-face, the more solidification you can have with those relationships, and it just deepens it even further.
Yeah, for sure. So maybe another aspect of communication is transparency. That is a word that's kind of thrown around sometimes, but what does that mean to you, and how do you try to? Let's take a moment to thank our sponsor. When we return, Dan talks about what kind of deal to never invest in. He reveals how to keep investors happy even if something goes wrong with the property. He also explains how to get repeat investors. And finally, he goes step by step through the process for securing capital. So stay tuned for that and more.
Do you have a website that gives you credibility and captures leads? ApartmentInvestorPro.com can help you get a professional website today. Typically, building a professional website can be a real pain, taking thousands of dollars and months of your time. One syndicator said it took him 10 months on his own. Another had to go through 3 different companies before getting something usable. ApartmentInvestorPro.com makes it quick and painless. All the design and content is already created. With 15 years of experience building websites for investors, ApartmentInvestorPro.com gives you peace of mind and lets you focus your time on finding deals and investors. These powerful websites capture contact information from your potential investors. You can even automate the follow-up process. No more letting good investor leads fall through the cracks. Save 10% on your website by going to ApartmentInvestorPro.com and using coupon code PODCAST.
So maybe another aspect of communication is transparency. That is a word that's kind of thrown around sometimes, but what does that mean to you, and how do you try to?
Well, for one, I want to make sure our investors have access to us, each one of the managing partners. So in every offer memorandum that we send out, we put our personal cell phone numbers in there so that if at any point in time an investor has a question about a property, whether they're in the deal or not, they can reach out to one of us. They can either email us, call us, text us. We try to be as accessible and as available as possible. And this is one of the things that I kind of consider as a red flag, actually, not a yellow flag. So a red flag is a no-go, right? This means you don't invest, is with a group that only has one partner in the group. And the reason why it's important is because a friend of mine that I was in a mastermind with, and he had invested $200,000 into a project. He's in New York City. He invested in a project inside of Georgia. And then he brought in a friend of his to invest in that project as well. And he put in $200,000. And about 6 months into the deal, because it was a one partner operator, that person went ghost on them. Like literally they can't figure out where the guy is. And it's possible that it's a legitimate, like he went on a vacation down in Maui and then or down in the Bahamas and just never came back and died in an accident down there. Who knows, right? But they can't get a hold of him. The property's still there. The management company's still there, but the management company won't communicate with the investors because they're not contracted with the investors. They're contracted with the management, with the sponsor. And then of course you're like, well, you can just have a court order. Well, according to the operating agreement, you actually have to arbitrate first before anything happens through the courts. Well, what happens when you can't arbitrate somebody, right? Because you can't find them. Well, now they're trying to get a court order to try to take over that property and be able to, manage it a little bit better because that person went ghost on them. And so the reason why I call it a red flag is that I will never invest passively with a group when there's only one operator. when there's only one partner in it. I want to make sure that there are multiple partners in that project, so that I like to have at least two, but preferably three, because if one of them goes ghost on me, at least I can get access. I can call the other two, right? The chances of three different partners and three different locations of going ghost on me are going to be pretty low, right?
Yeah.
And so that's one thing that we do is to be able to make sure we have that transparency with our investors from that aspect of it, but also being able to release the financials on the properties that they're inside of, and being able to ask for any documents that they want or anything that they want to see. They can come to the property, they can view things. There's a lot of things that we allow for our investors to do, obviously within certain guidelines. We're not just going to say, hey, all of you investors can go show up at the property and, ask for stuff. We would make sure that one of our partners was there and, things like that. Or if an investor wants to secret shop, we love that because it allows us to have another set of eyes on what's happening on the property. If we need to change or modify something, then obviously we can. And the more people that can, help us with that piece of it is helpful. Obviously, we don't want to bombard our properties and our staff on site with secret shoppers, but it happens occasionally. Like we maybe have a couple of investors that will want to do that, and we're more than happy to accommodate for that kind of stuff.
Okay, that's cool. And can you tell us about a time maybe when something didn't go as well as expected? Something went wrong in how you communicated that to your investors?
Well, nothing ever goes wrong, Todd. Everything is perfect. If anybody ever tells you that, another big red flag, run, right? I tell our investors all the time that our projections are based off the current market conditions and what we know with the property. It doesn't take into account, something happening down a water main breaking or something like that down the road. And so we have to make sure that we can underwrite for some of those extra things to make sure we have additional operating reserves for those kind of things that happen, so that if something like that does happen, we don't have to do a capital call thing like that. But one thing that did happen on our properties is one of our acquisitions, we had projected a 275% rent, not percent, I wish, a $275 rent bump on the property, because we were going to be spending about a $13,000 renovation project. I'm doing a $13,000 renovation project. And on that particular acquisition, thankfully, we only do one or two units at a time. So we're not going to try to go in there and try to do like 30 or 40 units all on the day one. Because of course we want to test the market, right? Test our theory of, yes, we think we can get this done. Because on this particular property, we checked with property management companies locally, not just the one we were going to go with, but a couple of them. We talked with some of the brokers, not just the one that we were buying it from, but multiple brokers. We actually shopped the comps ourselves to make sure that we could actually get these rent premiums that we could actually achieve. And everybody was like, yes, we can do this. It's not a problem. It'd be easy. And so we went in there, renovated the property, 2 of the units at around $13,000, a little over $13,000 a door, nothing, crickets. We could not get anybody to bite at the increase in the rent premium. And so what we had to do is we had to continue to drop down the price until we knew what the market was telling us as to what they could actually pay, or what they would be willing to pay for that particular unit from where it was located and things like that, and the amenity set. And so I think it ended up being about $175 rent bump instead of $275. So what we had to do is we had to go back to the drawing board and say, okay, what do we need to do to be able to reduce the renovation scope but to still be able to maintain the $175 rent bump? And so that's what we did. We went back to the drawing board. We reduced it from $13,000 a door to just under $9,000. It was actually closer to $8,000 a door. So we were able to maintain the level of investor returns that we projected, but we just reduced the renovation scope, so we didn't have to spend as much money on the renovations, so we can maintain that level of returns that we had projected for the investors.
Okay, so then you communicate that to the investors and kind of let them know what was happening, like you had
exactly. Yeah, in those email updates is where we did that. We said renovation update, went in there and said, we're having a challenging time for our renovations. This is what we're trying to get. We're not getting it. And then of course we were going to tell them what our plan is to try to fix it. And so we kind of talked to them about that step by step through those multiple emails. And of course, investors weren't upset, right? They like, okay, that's what happens sometimes. And it didn't affect their distributions at the time. It's not going to affect their returns in the future, but it's going to allow them to be able to understand what's happening on the property, so that when we do go to sell the property and we only got a 175 rent bump instead of 275, they're going to kind of know why there was that little bit of a difference there.
I think sometimes people, their tendency might be to try to hide those things from an investor. Like, oh, this isn't going as planned. I I hope they don't find out, but it's not going to be very good in the long run, is it?
Right.
So then we talked a little bit more about, we talked earlier about building that relationship and how some of that's sort of automated, some of it's personal. And you talked about knowing, like, and trusting people. So what do you do then for people to really get to know you more, or, building that relationship besides the things we've already?
Well, I like to have a phone call with all of our investors if I can. I know some of them are really busy and they already know us from multiple areas. And so they already have that inherent kind of credibility and trust built in. And so they don't necessarily always want to jump on a phone call with us, but we try to get on the phone call with them to be able to understand who they are, a little bit about their background, and build that relationship with them. And even with a 506C, we like to do that. Even though we don't have to, we like to be able to do that because it can deepen and build that relationship further. And if they're not filling out their documents fast enough or sending in their funds fast enough, I have their cell phone number and I can just text them on my cell phone and say, hey, do you have any questions? You need any help? Whatever, try to speed that process along. And it definitely goes a long way. But there's a lot of things that I've already talked about that kind of already helps to kind of let the investors know who we are and understand how we work and how we operate. And then I do also have some investors that will ask for references. And so we try to be as open with that as well, and give some of our investors contact information to those investors so they can reach out to them and have that conversation about what it's like to be a passiveinvesting.com investor.
Yeah. Okay. And you mentioned earlier about how when you do have that conversation, you make note of some things. So then I guess in future conversations, you try to bring those things up and kind of ask them about their family or their team or whatever.
Absolutely. You'd be surprised at how many investors are like, how did you remember that?
Yeah, it goes a long way. So that personal interest. Yeah. So like for investors, do you have in other areas? I know you said you try the phone. Do you use Zoom sometimes too, like a face-to-face kind of thing if you can't meet with them in person, or?
Not usually. I started doing that in the beginning, started doing all Zoom meetings, but we were having too many people that had technical difficulties trying to get it started and get it turned on. And then a lot of them would just use their phone anyway. And so I was like, let's just get rid of the Zoom piece of it, reduce that component, because we're not dealing with people with our investors that are doing Zoom calls every single day. A lot of them are not even familiar with how to even use the Zoom platform. Even right now with COVID, with a lot of people using Zoom, they're not, right? And so instead of having to have that level of communication with them about having to teach them how to do Zoom, and then it makes my calls go longer. So I usually only schedule about 15 minutes for these calls. And I usually have about a 15-minute wrap up after each one of the calls. But a lot of times it'll bleed over because we're trying to take the first 5 or 10 minutes getting them set up on Zoom. Being able to just have a phone call. If they ask for one on Zoom, sure, I have no problem with that. I have had a few investors that have said, hey, would you mind jumping on a Zoom call? Sure, no problem at all. But we haven't actually done that as like a across the board type of thing. Right.
Yeah, it makes sense. You lose a lot of time that way. People, and then you a lot of times end up having to call them anyway because they didn't join. So, we kind of touched on a little bit too, but like managing the investment, of course, is a big part of keeping them happy, because no matter how much someone likes you, if you lose their investment, they're not going to be too happy and want to invest again. So do you have any suggestions for like how you manage the investment itself so that the investors are consistently happy with their investment?
Well, I think a lot of it has to do with the upfront underwriting in the very beginning, because one of the things that we do that a lot of groups don't do is we have plenty in operating reserves the day we close on the property. So I told you about that one called Braxton Cary Weston that we're raising for right now. And we actually have over 1.7 million in operating reserves day one. Now, some of you might be thinking, well, that's a lot of money. Well, this is not a small deal. So our group only goes after minimum 20 million upwards to 75 million acquisition. And this one is actually a $57.6 million deal that we're closing at the beginning of November. So we want to make sure we have plenty in operating reserves just in case we need it, right? So it's a kind of a fail safe, if you will, and it allows us to avoid any type of future capital calls. It doesn't completely avoid it. So if we somehow use up the full 1.7, then obviously we would have to do a capital call of some sort. But it allows us to be able to sleep well at night, as well as our investors to sleep well at night, to be able to have that ample operating reserve just in case we need it. And then one of the other things that we do is that our underwriting model does not actually take into account that we are giving that back to the investors at the end. So let's just say if we spend, let's say 500,000. So this is a 5-year hold project. So let's just say we spend $100,000 a year in excess for these operating reserves. So there's random things that happen on the property or whatever, right? I don't think we would need that, but again, this is a large property, $57.6 million over 30 acres. I mean, there's a lot of things that could possibly go wrong. So let's just say we spend $100,000 a year on this, on extra things, right? Well, now we still have 1.2 million that we're going to be able to give back to the investors when we sell the asset, where our underwriting model thinks that we've spent it all. So it allows us to be able to increase the returns because we have that extra cushion in place. And of course, on this particular deal, because of COVID, normally we underwrite for a 7% vacancy during renovation. This one's underwritten for 9%. Normally on this particular size property, it would take us about 12 months because we're only renovating about 50% of the units, because the other 50% have already been renovated by the current owner. And so we're going to be renovating the rest of the units. And so normally it would take us about 12 months, maybe even shorter than that, but we actually increase that to 20 months, right? So there's a lot of things from a underwriting standpoint that you have to mitigate some of that risk and some of that, level of return from that standpoint. And the nice thing about multifamily is that usually you're going to have a split, right, with the operator and the investor. So in our group, we always do a 70-30 split, 70% to the investors, 30% to the operation team, right, to us as the operator. Well, if for some reason we need to give up some of our 30% to make our investors whole, we can do that, right? Because we have that extra cushion built in there as well. So there's a lot of different areas inside of these types of models and these types of assets where we actually have that extra cushion. And the chances of somebody losing money is fairly low. Right now, getting lower return than projected, that's more common, right? But losing money is a lot more rare in this type of situation, unless the property somehow just goes completely defunct and nobody actually manages the property very well, and they're completely negligent, right? But they're probably not in business anymore anyway, so that's actually a good thing that the market will snuff those people out as time progresses.
Right, and so then done a deal, you've got investors, and they've been happy with that. Now the next deal comes along. What do you do to get someone who's invested with you before to invest again, or how does that process work?
Having a process in place for raising capital is one thing, right? And I think of raising capital as more like finding investors. And then there's a whole other level of what I would call securing the capital, where you now have the investors are there, the capital is there, but you got to figure out how to figure out a way to be able to secure it from the investor into the actual property account so you can acquire the property. And that's that whole securing capital component that allows you to be able to have a system in place to cure that capital. So one of the things that we do is, like I said earlier, we send out this little, brochure, let's say little 72-page document that's nicely done, professionally printed, and that's sent out to the investors in a priority mail envelope. What we do first, though, is we send out the email. So we actually have another deal that we're releasing next week. So let me just tell you what we're going to do to release that one. That'll probably be the best thing. Mm-hmm. So on Monday, we're going to be sending out an email to all of our investors and then introducing them to the deal and letting them know we have a new deal, right? New deal alert is going to come out. And it's going to have in that email all the different items that they're going to care about: market information, where it's located, what type of asset it is, what the business plan is, what do the investor level returns look like, what kind of classes of share are available, and then we're going to invite them to a webinar, which we typically do the next day or two after we release the email. So this one's going to be done next Tuesday night. We'll usually do them in the evening at 9 p.m. because it allows us to be able to reach the entire country a little bit easier and we also record it. So those people who can't come to it, we do record it, and then we'll send out the recording the next day. But we'll invite them to the webinar Tuesday night. But then Monday, this right here these are already printed up today. This is the Braxton Kerry Weston one, but the one for this other deal it's being released next week. Those are already printed up for that next deal, and they're actually at the printer, already ready to be dropped. They're going to be dropped on Monday next week. So because we're doing priority mail, within 3 days, all of our investors will receive that. On Tuesday, they'll start receiving it on Tuesday, Wednesday, and Thursday. And so they'll start receiving that into their mailbox. On Tuesday night is when we invited them to the webinar. So Tuesday night, they're going to come to the webinar. And then on Wednesday, we're going to send out the recording. And all of the emails that we send out, the one on Monday and the one on the one on Wednesday, it's inside of there, there's going to be what's called a soft reserve link. And that soft reserve link is going to send them to a form. We usually use a Google form, and it'll have them fill out information about how they want to invest. So we can actually set them properly up in our system. And then we will send them the PPM, the private placement memorandum, including the operating agreement, the subscription agreement, and the distribution details, all together in a DocuSign for them to be able to review, fill out the information, and sign off on it. The first page on that PPM document will actually be in some instructions with our wire instructions, so the investor knows where to send the funds. There'll also be a number on there for them to call to confirm the wire details. And then once we receive their funds, after they've sent them in, We'll usually send them out within the same day. We try to tell them about it, because when you're wiring 100,000 or whatever, sometimes it can be nerve wracking when you send out 100,000 and you don't hear for a couple of days as to whether somebody receives it. So the moment we receive it, our bank sends us an email notification, and my assistant Ann sends that investor an email, usually within a matter of minutes. So they let them know, hey, we have received your wire. You are confirmed in the deal. Here's what to expect. We're closing on this date. You'll receive another email when we actually close on the deal. And that money sits inside of that escrow account until we actually close the property. And of course, that money goes over into the seller whenever we're selling to be able to close the deal out, and then also into the operating account for the extra operating reserves, as well as for the additional closing costs and fees and things like that. And then that's it. So once the investor gets that closing email, in that closing email will also be another investor guide that will tell them about what to expect on the property. Talks about the monthly updates, the monthly distributions that we're doing, as well as those quarterly financials, and then the year-end K1 reporting as well.
All right, great. And so that webinar that you send out, like when you have a new property, you send that out to both people who have invested and haven't before?
Correct.
Everybody on your investor list. Okay. And then I guess then the ones that, have invested, they're probably even more likely to invest with you again, since if they've been happy with previous deals. But, and then what about referrals? Do you ever ask for referrals, or do you just let them kind of happen naturally? Or
most of the time they just happen naturally. And of course, earlier on, we didn't see it as much, but now that we're in multiple projects, we have that track record built up, and we've built up that credibility. That's when we're really starting to see some of our investor referrals coming in. And one of the things that we did uniquely with our investor newsletter this month is we actually sent out the investor newsletter, the investor newsletter to the investors like we normally did. And then this month we actually sent a second newsletter, and then we shrink wrapped it and put a sticker on the outside of it and said, this is an extra newsletter for you to pass off to one of your family, friends, or colleagues. So again, it's in a built-in referral base. So I guess kind of that's a way to ask for it, right? Is hey, go pass this off to somebody. And now that it's already printed up, they're going to likely pass it off to somebody, right? Because we've actually already printed it up. They don't really want to feel like it's wasteful. So they're going to go and send it out to pass it off to somebody else that they know that might be interested in it.
Yeah, that's a good idea. Plus it kind of plants that seed they maybe hadn't thought about telling other people until they see that. And then who knows, in the future, even when they get their regular one, they might pass it off when they're finished reading it.
That's right.
And so do you have any other tips or suggestions, anything else that you do to keep investors happy so they'll invest again, or any other final thoughts on that?
Sure. So one of the things that I try to do is whenever an investor emails me, one little thing that I do, and even if I can't respond to it right away, I'll try to reply to that investor and just say, hey, I just want to let you know I received your email. I'm doing some research. I'll get back to you later in the week, just so that they know I received it. Because I've sent out emails to people before, and you hear nothing from them for like days. You're like, did they even receive my email? Right. And so to me, we try to maintain that email etiquette, if you will, and either respond to them within the same day, or at least reply to them and say, hey, we're going to do some research on this and we'll get back to you. Right. Yeah. And that way their email is not just sitting there and they're kind of wondering kind of what's going on. Because we do get questions quite a bit on our properties when we send them out, because we'll have some newer investors that aren't familiar with our structure or our setup or the business plan. And so we get emails every day with some questions from different acquisitions that we're acquiring right now, especially when you're doing 3 at a time. Right. You get lots of different questions, and you got to remember which property are they talking about. But that's another thing that we do to be able to make sure we're maintaining those relationships with the investors, because communication, I would say, is the number one thing when it comes to these relationships. Because I've had investors that have come over to invest with us from other groups, and the number one complaint that they talk about as to why they will never invest with that group is their lack of communication, their lack of actually communicating back with the investors in a timely manner.
Yeah, that makes sense. And I'm just curious, when let's say somebody sends you an email and you need to do some research and you respond right away, but how do you keep track of that so it doesn't fall through the cracks and you do actually respond?
So we actually use Outlook. So we're actually on Microsoft Teams. And so we can flag our emails. We can also, my email list is actually my to-do list. So I'm not the type of person that's going to leave everything in my inbox. I'm not that person. So my email inbox is empty. That means I'm done, which I'm usually never empty. So I'm usually never done. I'll sometimes, usually about once a month, get it to a point where I have maybe 2 or 3 emails left in there. But for the most part, I'm always going to have a list in there. And so I know the next day when I come in, these are the things that are on my plate I got to make sure I get back to investors on.
All right. And so finally, what's the best way for our listeners to connect with you then?
Sure. There's a couple of different ways. So I actually have a training group. We do free weekly webinars called the Multifamily Investor Nation. So you can go to multifamilyinvestornation.com and you can sign up for our weekly email list. We will send out free weekly training on how to do multifamily, right? And then if you're interested in possibly passively investing with us and you want to jump on a phone call with me, you can go to our website, passiveinvesting.com. On the top right-hand corner of the page is a Join the Passive Investor Club button. And when you click on that, there will be a form that you can fill out. And then I will have my assistant reach out to you and we'll schedule a one-on-one phone call so we can discuss your investment goals to make sure that our group is a right fit for you. And of course, you can always find me on LinkedIn as well. So just go to LinkedIn and search my name, Dan Hanford, and glad to be able to connect with anybody and share as much as I can.
Great. All right. Well, thanks so much. Well, we really appreciate you coming on today and sharing that really valuable information about, how to manage investors, keep them happy. So thanks so much for coming on. I appreciate it.
Awesome. Well, thank you so much for having me, Todd. I appreciate it.
All right. Have a good day. Thanks for listening to this episode of the Apartment Investor Pro podcast. Be sure to subscribe to get the latest episodes. Also, visit our website at apartmentinvestorpro.com and connect with us.